Welcome back to today's morning report on Thursday the 7th of January with me, Rich Perry, market analyst at Hantec Markets. Let's look at dollar yen now, and the big safe haven trade of choice continues to drive, and that means dollar yen is falling away sharply. Now, I talked about the prospect of this 23.6% fib level around 1850 holding yesterday, or potentially acting as a basis of consolidation. Initially, it had worked. But it's just been wiped out, hasn't it? It looks like we're on to a full retracement back to 1646 now, which was that August sharp low. Look how the RSI is now 19 on the RSI. That's where it got to basically in August. This is a situation where you get a sharp, strong trend in place, and the market is certainly moving that way. Look at the stochastics and the MACD lines. You've got a bear kiss on the MACD lines. Stochastics also turning lower again. So the downside in this chart is possibly going to continue. Now, on this chart, you've also got the fact is that the around that sort of 15 area, 1550, is the massive key support from 2014. So is this going to be the breakout of a big, almost sort of 16, 17 month trading range on the on dollar yen? Well, it's not really sure yet, but 1646 certainly seems to be where we're probably going to be coming back to. And you'd be backing the trend with this. You'd be selling any rallies you get on dollar yen. Here we go on the hourly chart. Lower highs, lower lows, consistently finding resistance around old support. The latest one is 1820, but before then you've got a strong pivot level actually over the past few days around the 1870 mark. 1870, 1880. So that is a key level to watch, but certainly at the moment you've had this latest breakdown, and it doesn't look all that pleasant. Just pushing out, you've got bearish configuration. I mean, it goes without saying you've got bearish configuration on the momentum on the hourly. Every time it gets towards sort of 50, 55 area, the rally falls over. Currently around 27, so maybe there is the prospect of another little bounce, but you'd be selling into that rally. It doesn't look happy across the indicators. Again, as with cable, as I spoke about earlier, the falling 21-hour moving average is actually a pretty good basis of resistance now, isn't it? Over the past few days. That comes in at 1826, so again, that sort of is in line with this resistance that is the old support. But it doesn't look particularly pleasant, and certainly now with the renewed downside pressure, day low pretty much on the on as we speak, it looks like we're going to be coming back for a test of that 1646 level. So it doesn't look all that pleasant, and that is not positive for general market outlook. Oh dear. Anyway, I will speak to you later. Thank you. Good luck.